You're listening to the Go Get Them Show. This is a discussion that inspires entrepreneurs to pursue their passion to create meaningful, impactful, and sustainable companies in Asia, Africa, and LATAM. This is your host, Maxon T, together with my co-hosts, Arun Krishnakumar and Sheila Mburu. We sit down with entrepreneurs, operators, and investors across frontier markets to discover their experiences, lessons learned, and how they made an impact. So,
22 portfolio companies. I mean, Indonesia is a market with a grand total of 60-some companies with a valuation over 25 million, many of which, a third our companies are graduating there.
On one side, a lot of opportunity to be tapped, and I think more importantly, a lot of impact that could be made in the societies. That's, I think, the most important thing.
For this episode, we have Eddy Chan. So Eddy Chan is a founding partner of Intudo Ventures, the Indonesia-only independent early-stage venture capital fund. It also supports the digital transformation strategy of dozens of Indonesian conglomerates, and they have some amazing portfolio companies, including the likes of Oriente, Zendit, Halodoc, TaniHub, Cargo, Passapolis, Yamicorp, and more. He is a founder and venture investor with expertise in founding and operating companies. Prior to Intudo Ventures, Eddy also invested and advised startups since the late 1990s, including PayPal, Palantir, Affirm, and founded and operated his own company with operations in Silicon Valley and in Asia. In his previous life, he was also a lawyer that practiced corporate M&A, private equity, venture capital law in Morrison and Forrester. He holds a JD at Georgetown University and also is a BS of Business Administration at UC Berkeley. Welcome to the show, Eddy.
Thanks, Maxon. Thanks, Arun. Really a pleasure to be here.
Eddy, thanks for joining us. I'll start with a very simple question. Why Indonesia and why a venture fund focused on Indonesia tech?
Yeah, to be frank, for myself, it's really driven on serendipity. Having seen multiple ecosystems blossom from early on, call it in the 80s with Taiwan, Korea, and Israel, certainly China in the late 90s, and India, call it in the 2000s. I've seen this firsthand, whether being an investor, an operator, a lawyer, and with Indonesia, it's a market that I've followed. Growing up, in each of Silicon Valley and Taiwan, Indonesia did represent the largest population of Taiwanese people in all of Taiwan. So certainly got some exposure there. And as my clients started looking at the Indonesian market, when I was a corporate M&A lawyer covering a lot of Goldman Sachs, Morgan Stanley, et cetera, they started looking at that market, call it in 2010. And it was really exciting seeing a country that, often people are wrong by a magnitude of 10, call it, 270 million population, certainly very young, fastest internet growth in the world at 19% year-over-year growth. So a lot of great macro factors. But to be frank, really it was serendipity, really. My best friend in Hong Kong called me up one day and said that his college roommate 20 years ago was transitioning out of Goldman Sachs, where he was running the private equity and venture practice in Indonesia, and that we should, kind of get acquainted and get to know each other and discuss opportunities to invest both in Indonesia and Silicon Valley. And concurrently, my other co-founder, similarly, multi-generation friend of mine had reached out saying he had brought business in Indonesia and, ramped his user base, to be larger than, in his home market. So very exciting demographic factors. And just seeing how ecosystems have blossomed over the years, obviously, often inspired by, if you will, returnees, or what we call pulang kampung sea turtles, or, returning home Southeast Asia turtles. It got us really excited, and, the rest is history.
I love that. I must say, Pulang Kampung. I'm from Malaysia. I am planning to go back to Southeast Asia, so that's why I'm very excited. One of the key things, I guess, I wanted to understand a little bit more. You've been in Silicon Valley and Asia, right? So I wanted to understand what are the key differences that you see between these two venture ecosystems, because not one are the same. And I think increasingly likely you're going to see a little bit more localized solution for Southeast Asia as well. So keen to get your thoughts.
Yeah, so when I think about like U.S. versus Asia, I'd always argue just early ecosystems often are driven by general marketplace models, right? So if you look, in the early 2000s, if you look at China, certainly we had the likes of Baidu and Search, we had the likes of what do you call it, Ctrip, with travel, what do you call it, Tencent, JD, etc. And then when you look into Southeast Asia, we've certainly been following the Indonesian market since inception, call it 2011. And I would say that, Internet 1.0 from 2011 to 2016 was in large part driven by general marketplaces. Hence, you have Tokopedia, or if you want to call it an Alibaba or an Amazon. You have, call it Traveloka, which, circa, C-Trip, Expedia, which is even investor, in Traveloka. And so you see a lot of early general marketplaces in any early ecosystem. I don't care if that's the United States, if you say, China, India, and then today in Southeast Asia, the first call 5 years, 6 years, and 7 years. I think you do see general marketplaces, and then you start seeing what I call more, digitization of specific industries or sectors, right? So from 2016, call to 2021, we've seen kind of Internet 2.0, where you see digitization of call agriculture, with one of our, our category winner businesses, Tawny Hub in the agri space. I've really enjoyed working with from day one. Otherwise, in insurance, you see Pasar Police, right? Also, you start seeing, in logistics, it'd be like cargo, right? You got to ship, some of your products in connection to support e-commerce. And you see a lot of these picks and shovel businesses like that, trucking logistics, where you need logistics to support e-commerce. You need payments, for example, right? Like Zendit, which another is one of our category winner businesses, called the Stripe of Indonesia, if not even the Stripe of Southeast Asia. So I do think, if you're to say what are the differences between the two ecosystems, I would say it's just every venture ecosystem early on, I do feel adopts a little bit more general marketplace models, and it just gets increasingly specialized, both with respect to digitizing specific sectors or just picks and shovel businesses to support those, kind of giants, if you will. And so we saw that play out certainly in China. We're seeing that play out certainly today in, in Indonesia. And over time, you start with maybe more B2C models. You start seeing some B2B2C models, some picks and shovel businesses, and we are seeing a lot more, B2B businesses and more kind of deep tech businesses, which you start seeing after you see a little bit, more in-country talent, as you see people see scale in market, experience that scale in market. Maybe, they don't necessarily have to, go abroad to see, these global practices, if you will, or come to a Silicon Valley. If you look at Taiwan from 1983 to 1990, certainly a lot of influence from folks that, had a chance to work in Silicon Valley at TI, et cetera, guys like Morris Chang that built out TSMC. Certainly, if you look in China, Sina Sohu, NetEase, C-Trip, Baidu were, heavily influenced by, founders that went to Dartmouth, to Stanford, to Yale, to Buffalo. And if you look at Indonesia market, certainly it's, you got the Nadims that were at HBS. You got, Ferry Nardi at HBS. If you look Southeast Asia more broadly, you got Anthony Tan with, Grab, which is about also HBS. So we see that early influence. And over time, though, as the ecosystem matures, you get that next generation of founders that often maybe doesn't need to go abroad to get that exposure. No different than what we saw in China, post 2008, you kind of had two camps. You had called Hai Gui Pai, where often people would really be focused back on returnees. And you did have another pack, which we called more like Buntu Pai, where, homegrown, if you will. And so it's really exciting to see every ecosystem kind of goes through that same, experience, if you will.
That's great, Eddie. Because if you look at Indonesia, the second batch of entrepreneurs are kind of starting to mature. I mean, the firms that you mentioned, the Pasapolas, the Zendit, Oriente, are all amazing portfolio companies. I mean, I've just looking at your portfolio, at least like 6 of them have a real chance of becoming superstars, unicorns, and whatever the grandiose names we give to them. So what is your investment style that has given you so much success? There must be something. What's your secret ingredient?
Well, I don't know. I mean, success. I mean, ask me in 8 years. I think venture is a very long game. I think back to Palantir is a 17-year journey from beginning to IPO. Look at Airbnb. Similarly, a firm was about 10 years. So I do think so far we see very promising indications. I would say in the Indonesian market. Once you get to what we call, kind of category leader status, which is called Series B, Series C, there's generally 1 to 3 legit companies. And so I do think that, yes, in part, it's certainly, luck. We're at the right place, the right time. I certainly think, it's our differentiated strategy. I think that, as opposed to taking more of a regional mandate, which many of our peers have done, and, I really, thank them for paving the way. I think we came out the gate with, really this Indonesia focus, which is today an Indonesia only strategy that we exclusively back Indonesian homegrown businesses, predominantly founded by, at least one Indonesian to show that, hyper localization that's necessary to win in this market. And I do think that our process is, quite different than everyone in the market. We run a very concentrated portfolio across 4 years. We've invested in a grand total of 22 companies. And as I think about it, every VC says that they're involved, and I get it in terms of, after they invest, they deliver ABC. But I think we really pride ourselves in, really being involved prior to investment, and it's really that sourcing and diligence strategy. And getting back to it, I think, people is all that what matters. I think where we invest as an early stage investor, I classify it as like, team is table stakes. If you have the right team, even if you go off the wrong market, you can pivot and this and that. So I think on team, we've done a really incredible job both in country, sourcing the talent out of, call it ITB, University of Indonesia, as well as BINUS, where the founders of Bukalapak, Tokopedia, kind of et cetera, went, and we, teach entrepreneurship class there. And then, in the United States, we pretty much built a social graph of pretty much every, Indonesian at the most elite university campuses, as well as corporate campuses. So I actually personally spend, call it 8 to 9 months in the year in the United States on campus. So call it Southeast Asia MBA Weekend, with a sole sponsor and speaker for the last 5 years, putting together a sponsorship group, the speaker group, and same with Harvard Asia Business Conference, 3 years in a row, sole sponsor, right? Same thing with MIT, same thing with Duke. And I think it all comes down to the talent. And I think a lot of people fail to realize, but to find an Indonesian in America is really akin to finding a unicorn. Indonesians represent 46% of the population of Southeast Asia, but they only represent 15% of the Southeast Asians in America. So essentially, you have Singapore, which is 5 million people, have the same number of people in America, as Indonesians. And if you look at the first 30 companies, the valuation, call it over, $100 million in Indonesia, 92% of those founders did get, exposure predominantly in the United States. So once you really, get involved with that talent, often before, there's even a business, and build that relationship, no different than we did with Gojek, where the founders went to school with us, called 20 years ago in college, and then 20 years later were the first investor in the business. So we take a very long-term approach to the talent, and and that allows us to see people's true colors. When we diligence, we meet them, we get to know them, we meet their family and friends, take them through the distribution channel. Today we have, call it 20 of the top 50 to 100 Indonesian conglomerates invested in our fund. So we're probably the only independent fund, we feel, in market, where before we meet you, we date you. If that goes well, we take you to see the family and friends. So that's all these offline partners, as well as some of the, the major unicorns, many of which are investors in our fund, or the founders are. And through that process, we really iterate and do get product market fit and get really unique distribution advantage. And then on the back of that, that goodwill allows us to win these term sheet negotiations, often, without competing based on price, because we do all the work up front. And I think that's what the key differentiator is, that we're hyper local. With my co-founder Patrick, who's been multi-generation Indonesian, former head of Goldman Sachs, together with our 6 associates, all of which are Indonesian, and then we pair that with being global, being the only firm at early stage that has a U.S. operation and Indonesia and in Silicon Valley. As far as I understand, I don't think any other hyper local firm has that kind of, if you will, hyper local and global deliverable. And as our companies go back to market, not only do we help on distribution, but the follow-on process, the majority of our companies who run the follow-on process, so almost, I think, over half of them have, our LPs directly on cap table. And today, we're very privileged to say that, 25 of the top, call it VC funds in the world, or their founding partners thereof, are LPs in our fund, and often look to us as their Indonesia beachhead strategy. And, the ones we can publicly talk about would be like, Peter Thiel's Founders Fund, which is kind of at least one of our LPs that we can talk publicly about.
Amazing. You talk about, so I just want to roll back a little bit. You talk about, the team is table stakes. My question to you is, how do you evaluate a person, right? It's not an easy thing to do. It's more art and science, but keen to get your thoughts about, how do you evaluate, how do you pick out, like, some of the key founders? Is it time, right? Or is it, some other attributes that you look for?
Yeah, so if you look at the word Intudo, it's not named after our initials. Otherwise, we'd call our firm like ETP or whatever. It's integrity, sincerity with an appreciation for serendipity. So hence Integritas Tulis Jodo, hence Intudo. We've built a firm that can last hopefully multiple funds, if not multiple generations, and survive generational transfer. So I think that's the baseline that we have expectations in anyone we deal with, particularly founders. So I think that's, once again, table stakes. Now, after you satisfy that bar, I think that most people we talk to certainly have the intellect, but then it's really seeing their character and seeing them in action. So we're not the fastest founder, investors to move. There is many investors in market that will, issue a term sheet on first meeting. We do take some time. Our minimum period is generally 3 to 6 months. So we meet you. If the chemistry good, we date you. Then we take you kind of through that distribution channel. So we see you in action, right? Like we see you pitching to that conglomerate for that B2B2C deal. If you're trucking logistics, we see you trying to say, hey, this is what I want to do. Should we build a trucking management system? If you are, call a genetics business, let's take you through the labs, because by no means am I a subject matter expert in genetics, in, whatever cryptocurrency and everything. It's ultimately all our models are built bottoms up. We do look at the Google Temasek reports and this and that, but actually all our models are built bottoms up, and that's how we build conviction, both ourselves and through both our LP base as well as our partner base, and that we meet you and we take you through the regulators. So we pretty much eliminated in large part commercial risk as well as on the product market fit side, as well as regulatory risk before we deploy Senate capital. So it certainly means that we don't, move the fastest. Does that mean that we'll, sometimes miss deals? I'd like to say Indonesia is still a very early market. I don't feel there's any deals that we missed that we could have done at the stage that we operated at. But by virtue of like limiting all this, that we get to know the founders through good times and bad times. And then at the time that, we're ready to go, we take them, for example, to call it Tiffany, Bulgari, to kind of measure that ring, if you will, and then, choose that diamond. And if they, ultimately shop the term sheet, then we know that that's somebody we shouldn't be marrying. And we've seen that, in the last 3 years, we've issued 11 term sheets, and we had, one experience like that where we took them through the channel. Ultimately, they got the right customer base, issued the term sheet, and ultimately shopped it. And so we just can't work with partners like that.
That's brilliant, Eddy. A question for you. If I were a founder in Indonesia, I'm really looking for pre-Series A funding. And how do I get to impress you?
Yeah, so predominantly we focus on Series A. That's our bread and butter. We do about 2 to 3 of those a year. Generally, those are $3 to $6 million tickets, initial tickets. We do pre-A. Getting back to your question, it is heavily a strategy that's a little bit more unique. We do about one of those a year. In the last 4 years, I think we've done a grand total of 6. Often those are sourced abroad. As I mentioned earlier, 1 in 3 of Intudo deals is actually sourced on university or corporate campuses in the United States. So, how people access us usually, honestly, is usually through friends. I feel that we've, at this point we have, 22 portfolio companies. Indonesia is a market with a grand total of 60 some companies with a valuation over 25 million, many of which, a third our companies are graduating there. So, generally speaking, we find that most entrepreneurs can find us through that. God forbid they can't. They certainly can, kind of cold outreach to us. But in experience, it's predominantly been us finding them on campus. We built a social graph pretty much, every Indonesian at every major elite program. So, at Stanford, it's 2 freshmen, 2 sophomores, 2 juniors, 2 seniors, 1 first year MBA, 2 second years. Harvard currently 0 freshmen, 2 sophomores, 0 juniors, 0 seniors. I believe it's 3 first years and 5 second year MBAs. So by building that social graph, we just feel that, if we don't catch you, somehow there will be a friend. I spend, on an annual basis, I speak to, several hundred, young Indonesian talent with a very long-term view. So it's not that, they have to be a founder. We really just want to deliver the value up front. If they want to stay in the US to work, if they want to join an Intudo portfolio company, if they want to go work at a unicorn, we work with the head of HR at every major unicorn in Southeast Asia. And with a view that if and when people come out and they're ready to be a founder, we're that first phone call. No different than, our experience where, Patrick had the privilege of going to school with some of the founders of Gojek 20 years ago. And hence, we were one of, if not the first investor in the business, called 15 years later.
Awesome. Now you're onto your fund too. We talk about how you source it. What are some of the things that you're most excited about?
Yeah. So I'm most excited in large part by just, as I look at the stakeholders in the ecosystem, I'm very grateful, particularly to, I think, the Indonesian government, with respect to this omnibus bill that, got passed through last year. We're starting to see, the early implementation of that, which I think has been quite encouraging, really encourages foreign direct investment, which, as we all know, is a pretty substantial part to GDP. I think maybe the second largest piece to private consumption, if you will, which is around 60%. So I think that piece, I think the ease of doing business has improved quite markedly. I recall, in the ratings, at least, Indonesia was, the hundreds, call it, 7 years ago, but, during the Jokowi administrations, certainly, shot up there to, call it number 70. So certainly, a lot less red tape. We've seen, businesses can get set up a lot quickly via electronic, on electronic systems, as well as, as I think as to, labor law, it's, a lot more clear now, which I think a lot of multinationals like. A lot more clarity as to, what are those, the hiring and firing practices, severance payments, and the ease of bringing talent in the market. And I think I credit the government for setting it up such that to understand, appreciate the need to bring in, both, world-class human capital as well as world-class financial capital, akin to, certainly I think Singapore's done a great job with respect to that. And I think on the back of that, this, sovereign wealth fund that was launched, call it late last year or this year, it's, developed some, pretty strong traction with, looks like a lot, support from a lot of the major players globally, call it the United States with DFC, certainly Japan, the UAE. So I think, a lot of this, will be spent on infrastructure, if you will. And, if I would run a parallel, maybe You think of the New Deal, in the 1930s in the United States, call it dams, highways, etc. Maybe you think about the Marshall Plan as we think about Europe post World War II. If you think about the Asian tigers in the 70s, 80s, I think Taiwan, Singapore, Malaysia, kind of Hong Kong, I think did a great job with that. And then certainly, I think China, India done a wonderful job, call it in the 90s and the 2000s, the 2010s. And I think, Indonesia is well on its way in terms of these infrastructure projects that, create jobs. And also, a lot of our businesses do have some offline element. And so facilitating, travel between these markets, shipping will obviously help out logistics, and it'll create jobs, which, then in turn can, and as you have more jobs and people satisfy their basic needs of water, food, and shelter, they naturally start spending on services. And if you look at a lot of the biggest companies, call it in China or the US, are very service driven, right? And I think that we're going to slowly start seeing it. So that covers, I think, on the omnibus as well as the global macro view towards Indo. I think as you think about the venture ecosystem, it's been really exciting to see its scale in market, from really blossom, if you will. This is an ecosystem in 2017 when we started Intudo Fund 1. I kid you not, there's a grand total of 15 companies with a valuation over 25 million. That's like 1 meter in San Francisco. 2 years later, that became 30. Today, you have 60-some companies with a valuation over 25 million, half of which have a valuation over 100 million. So I do think product and engineering talent, you're seeing the offshoots, the next generation of founders come out of a lot of these businesses, particularly some of the unicorn businesses that now are hitting scale. Many of the people maybe have vested. They're now want to go on and start their next entrepreneurial endeavor. So maybe we'll see the next generation of the Google mafia, the PayPal mafia, whatever it be, as we see this happen. I think the capital, now as we talk about the capital stakeholders, when we started in 2017, we operated pre-A. The reason we're, Series A and Series B, C was an open question. Follow-on capital is extremely scary. And I think that we in large part solved that by bringing on those 25 or, so global VCs where, today we have like over 10% of, call it Forbes Midas list invest in our fund to act as that Indonesia beachhead strategy. Well, so that's how we solved for. In 2019, we launched a Series A fund, but BC was an open question. It was very scary. And I really credit, the regional managers, some going multi-stage since then, so covering that gap, as well as all the top global managers coming into the market, with many friends, even publicly, GGV opening in Singapore, Lightspeed opening in Singapore, Shiming opening in Singapore, Sequoia being in Singapore. And so that's been very encouraging, seeing a lot of the global investors write their first tickets into Indonesia, whether it be Accel Partners, whether it be Kleiner Perkins, whether it be A-Crew, a lot of folks that we've been very friendly with over the years. So I think, and then lastly, the exit environment, I think C, which was in our portfolio, I'm very grateful to, Forrest, Nick, all of them. They've been great partners in putting Southeast Asia on the map, if you will. Today trading at 140 billion, if you're call it a hedge fund or, a mutual fund, if you want exposure to Southeast Asia, it's kind of the only game in town. And, I'm hopeful, later this year, whether it be with Grab Altimeter and others, whether they go out via SPAC or, initially in country in Indonesia and the local stock exchange, which is aggressively deregulated and made it, a lot more favorable for technology listings. I do think this exit question will get answered. So, based on this, then I think you have a full ecosystem, right? You got government support, you got, product and engineering talent improving marketably, you got capital stack, and now you have exits. And once you have all that, I think that it'll really open the floodgates. And, I'm happy that just serendipity, brought us to Indonesia, call it in 2015, 16, and we were able to kind of put it, lay our flag as, one of, not the only Indonesia only fund that's independent, that, really runs this very involved, concentrated strategy more akin to a private equity fund that's hyper local yet global.
No, I mean, I can see the excitement on both your faces. So it's amazing how these things can happen in like a period of 5 to 10 years, and how ecosystems mature so quickly. I mean, I've been I was glad about India when the second batch of entrepreneurs showed us that the first batch of entrepreneurs weren't just serendipity. So that's amazing to see these evolution. One question, just going back to your life in Georgetown University, Eddy, did the young man, when he graduated out of Georgetown University, think that he will be a mover and shaker or one of the movers and shakers of Indonesia tech in whatever number of years?
No, well, first off, I think mover and shaker is an overstatement, so I'm certainly not that. Ask me in 8 years. As to Indonesia, frankly, I'd never traveled the country at that point, so I think that once again is a surprise. I will say, as to venture, I was really lucky, at a very young age. I was born in Silicon Valley. my parents are both 10 generations each from Taiwan, so they were, if you will, that batch of sea turtles that came to the U.S. in the 70s and moved back in part in the 80s. So I had a chance to see Silicon Valley's ecosystem really kind of blossom, call it in the 80s initially, more so maybe in the semiconductor space, and then similarly in Taiwan, in my hometown of Hsinchu, where folks like Morris Chang that grew up in large part in Asia, studied at MIT, was a TI, and then moved back in call it 1984, 85 to build TSMC, my hometown, from called scratch to a $600 billion company. So I saw that firsthand. And so on the back of that, when I went to school in Taiwan, I was very privileged that, my school was, started in large part to house the students of a lot of these entrepreneurs that had come back from Silicon Valley. Hence, they built this bilingual school in the Hsinchu Science Park. So got a lot of exposure there. When I moved back to Silicon Valley to finish out high school, and I was concurrently enrolled at Berkeley, I think that was, pretty, life-changing in that I had a couple of roles that really changed my life. One was at Montgomery Securities, which then became Nations Bank Montgomery. It was one of the four horsemen back then in technology investment banking. So got some nice exposure there. Also, I had the privilege to work at Silicon Valley Bank for my first paid internship when I was a sophomore. So 20 some years ago, $15 an hour if I recall correctly. And I think that was very special in that I had a chance to see thousands of companies, and it was really the colleagues there that really changed my life the most, in that they at the time introduced me when I was supporting a kind of a venture fund out of Asia backed by the Taiwan government, a number of financial technology conglomerates. They were very curious about online banking. It wasn't called fintech back then, 20 years ago, right? And so the folks at Silicon Valley Bank introduced me to a company called PayPal, and I had the privilege to back the founders there, called Peter, Elon, etc. And that really kind of changed my life, in that we had a chance to work on some Asia efforts. PayPal went public, sold to eBay. Peter started a fund called Founders Fund that we've been privileged to be a small part of, the last 2 decades. And, thereafter he started Palantir, and, several of the founders have been, key investors in our firm, and, key supporters. And then, we got exposure, certainly to a firm, which has been, really exciting, as well as each of, Tesla, SpaceX, et cetera. So it's been, quite a ride. And I think that a lot of that, kind of changed the trajectory of my life, and a lot of those relationships, call it 20 years later, having, folks like Founders Fund, support us, for our fund too, really meant the world to us to, really, that endorsement of us, really playing that role in market, really kind of supporting a lot of the top global guys as they come into the market. And, also, coming out of school at Georgetown, I did have the chance to cover Chinese ecosystem from day one. So I was in the Global Law Scholar program at Georgetown. They take 1 to 2 students a year, and you focus on a country or region. I chose kind of call it China, Taiwan, and Hong Kong. And so I had the privilege to cover Chinese market really from the year 2000 to 2012. So Sina, Sohu, and NetEase go public, right, in the US. You have C-Trip, which is modern day Traveloka, go public in 03. 04, 05, all the Valley VCs visits, call it China. And you're really fortunate, I had the chance to represent a lot of these top investors really from, almost day one, Sequoia China, Kleiner China, kind of. And, fast forward 15 years later, we are seeing these U.S. brands open, their outposts, if you will, in Southeast Asia, predominantly in Singapore. So it's almost like seeing a time machine from my, early career in law, and I had the fortune to cover a lot of the top investors back then that now even are looking at Southeast Asia, 15 years later. So it's it's a lot of life. It's just about serendipity. If I think about our firm name, that's what it is. It's Integritas Tuus Jodo, hence Intudo. And how I even met, you, Arun, is really just spending time on campus with the folks at UVA and your colleague. Mm-hmm. I think that we just try to put our best foot forward, and through that pattern, we just meet great people like yourselves.
Thank you. I mean, you may not consider yourself part of the movers and shakers in Indonesia, but you definitely are in Silicon Valley from what we are hearing here. So yeah, Max, over to you.
Cool. So you mentioned, over the years you have had some, few, I would say, colleagues that really changed your life. So my question next would be, try to understand a bit about your mentors, right? You obviously learn a lot from a lot of great people. And if there's one mentor, or if there's someone that, that's most remarkable for you, and what have you learned from him or her that really changed your life? Just double clicking a little bit. Keen to get your thoughts.
Yeah, as I think about mentors, I would say like almost everyone, there's something to learn from everyone, whether it be all the associates on our team. I certainly think, there are certain Chinese, they call guis, and are like very special people that like just touch upon you, and like the rest of your life, it really changed your life. And I've had a number of those folks, whether it be, the gentleman that brought me into Silicon Valley Bank. He there in turn, when I, started my legal career, he actually, was instrumental in helping me get that role as well. He was instrumental in me getting my role when I broke out of legal. I think back to, my boss at Morrison Forster. I met him the day before I went to law school, gave me an offer. The day my grades came out, my first semester, which weren't the most rosy. And, thereafter I had the privilege to work with him for 8 or 9 years. And, but for him, I wouldn't have my wife today, who is his wife's best friend. So I just, there's just been very many special people that touched upon me, just showed me, to be appreciative and kind of put my best foot forward. As I think about investing, certainly, learn a lot from my parents. My father was a venture capitalist, and certainly, if I think back to, that, single, small investment in PayPal that we made that, really just changed my life. Some of the folks I've met, being a, small, part of, Investor and Founders Fund all these years, there's just been so much to learn from, call it Peter, Brian, the whole team there, in terms about their approach to investing, the focus on moat, the focus on competitions for losers, really focus on non-consensus investing. And we've taken, a little bit of all of this and try to, come up with, our own thesis as to how that, would apply to Indonesia. So if you look at our investment strategy today, Series A is our core focus, where I generally feel there's maybe at most 2 to 4 legit companies per business model per sector, and we really run everything through that, if you will, commercial and regulatory, process first before we give capital, and try to really understand what is that moat that we have. Is it, a regulatory moat with respect to, having a license for cryptocurrency or having a license for lending, and similarly, as we go to, later stage business, then absolutely, I think TAM is important, the total addressable market. But I will say our early stage strategy, I think, is a lot of learnings from, some of the greatest investors in Silicon Valley, where, you get involved in some of these really busy sectors that, a lot of non-independent thinking investors look at, where you read in the Google Temasek report, the TAM's big, but you're going to find 8 to 10 competitors. It's going to be very tough to tease out the fake founders, because there's a lot of fake founders who just want to be a founder to be a founder. Great resumes, they're very good in presentations, show you this great TAM analysis, but ultimately you realize, A, it's competitive. B, as a VC, you're going to be paying high pricing. As you try to hire talent, you're going to get, a lot of talent that might just be reading research reports and stuff that doesn't really love it because they love that sector for real, more so just maybe because financial and monetary reasons. And then lastly, customer acquisition cost is super expensive. So if you look at our approach as it comes to, in the pre-A bucket, that, Aruna asked earlier, we really like to invest in stuff that's, more heavily technical, genetics, cryptocurrency, call it, data excavation, because we know those founders are legit. And generally, in Southeast Asia, it's such an early ecosystem, generally there's really, very little competition. So, and most funds are very reluctant to back such businesses, because you got to be very patient. To build a big business, I hate to say it, you got to be very patient. It's not just some app you put on the internet overnight, because if you do that, then there's not going to be much defensibility, right? So I feel like in the, let's say in the genetic space, once we got in there, we signed up all the big labs, we scaled, then we just, every single smart person that want to work on genetics in Indonesia, coming back, they had no other choice but to join our company. It's like SpaceX. It's SpaceX or NASA, right? You can't go to Google, you can't go to, Facebook to work on space. So we really like that talent moat, or even, whether it be a product first moat. Very few companies in Indonesia, I think, are very product driven or technical first. Many are very marketing heavy, with very, lousy margin integrity, with very limited, if you will, defensibility. So our early stage strategy is very focused on, deals that, I think no investor, for the most part, in their right mind, would invest in Southeast Asia.
Cool. I mean, I'll just go on with another question now. Sorry, I'm clearly very excited. So I guess for myself, you talk about Bahai Guipai, and I want to know a little bit more. What are your advice for people who want to go back to Southeast Asia, right? Maybe not Indonesia, but Southeast Asia in general. What are some of the things that they can do? What are the things that they should be learning about on the ecosystem itself, etc., etc.?
Yeah, no. So I think that's a great question, and we get that a lot, because a lot of wonderful friends like yourselves, or a number of Indonesians, maybe go to school, they come back 3 years later and what are these green helmets? I've been gone for 4 years, so what is this? Oh, it's something called Grab, or Gojek, or whatever it may be. So I do think that staying in touch with the ecosystem, I think that's an often big concern of a lot of these, if you will, sea turtles, where they may be now at Google, they may be in business school or in undergrad or whatever. And they're afraid. They're like, Eddie, do I have to come back now? And I'm like, to be frank, early on in the ecosystem, there is maybe some more of an edge, because you're more of a unique, something more unique. Over time, maybe it's no longer as unique to be a returnee. Although I'd argue for Indonesians, given that there's so few abroad, right? Like I said, Singapore is indexing at 40x on a per capita. The Chinese, it's 100x on an absolute basis. So I would say, obviously, you can read this and that, right? But I think staying in tune with the market, there's a lot of publications that you can read about, and then also we do stuff all the time. I would encourage any Indonesians certainly to talk to me. I make myself available to pretty much all the talent, and I think it's staying in tune, talking to founders, talking to your friends, and making at least call it an annual or once or twice trip to come back and market. And I think that should give you a little bit more flavor. And then over time, a lot of our deals where I said 1 in 3 of our deals are sourced in America. Often those businesses are kind of running already in America, where that founder may have a co-founder already in market that's kind of keeping things moving. So we can iterate, and then when they wrap up, call it grad school, or when they finish, they give notice at whatever company they're at, they land and are ready to expand literally. And so I would say that it's very easy to underappreciate how necessary it is to be hyper local. And so to take just any cut and paste business model, I think is it's proven that it doesn't work too well. If you look, we've seen a lot of players come in, let's say from North Asia, and try to run the same playbook in market and just kind of fail miserably. Particularly in, I would say certain sectors just don't travel well. Certain business models like financial services, it's just so regulatory driven, right? Or healthcare. So I think it is the best way is just staying in tune with people in the ecosystem, the stakeholders, whether it be the investors, whether it be founders, whether it be friends at these companies. And a lot of these, there's a lot nowadays. There's a lot of these webinars, this, that. I mean, certainly some of them, I think, don't share a lot of unique, data or information, because they just, share the rosy macro stats. So I really encourage you, talk to people that, are really comfortable, telling you as it is. I mean, we try to be pretty public. I mean, we publicly come out and said Southeast Asia is a fallacy. It doesn't exist. And I think a lot of managers are really reluctant to say that, because they like to add, populations up and claim, a big TAM. But you really got to do, I call it market bifurcation, to understand that Indonesia really is not, even Indonesia is not homogenous. I'd argue it's 4 markets. You have Indonesia A, just like in India A, where it's like 4 million people at 135,000 GDP. That's like, call it New York or San Francisco. Then you have, call it 60 million people at, call it, 6,000 GDP. That's more akin to Thailand. And then, you have kind of the aspiring class, which is 120 million people at an average of 1,300. So, you may have some people at 500, others at 4,000. That's, a whole nother story. And then the last, call it 100 million people, very difficult to access. I mean, that's really the base, and unfortunately, it is the global poor with a G per capita of call like $800. So I think you read about the 600 million people, bigger than the U.S., but it's really fictitious. So I really encourage anyone that wants to get comfortable with the ecosystem, really to spend more time on it and really dive deep and understand what the market opportunity is, as opposed to just reading headline numbers.
Nothing more, actually. Thanks for that. Thanks for an amazing primer on in the Indonesia tech scene. Really privileged, and it was a pleasure to be kind of having this conversation with you, Eddy, and thanks for making time.
No, far from it, and really hope the viewership enjoys it. And the off chance anyone's interested in learning more about our firm or having a chat, feel free to kind of direct them my way.
Absolutely. Where can they find you?
Yeah, I would say that the easiest way to track me down is, on LinkedIn, add me, but make sure to add some context, noting that maybe you wanted to go get them, a podcast. So we have a little bit of context, and certainly from there, we can see if, our firm or our friends can be supportive in any way, shape, or form as they think about venturing into the Indonesia market.
Absolutely. Thank you very much, Eddy. We'll hope to see you soon.
Thanks, Max.
Thank you.
Bye.
Cheers, Eddy.